Thanks for taking the time to download this BBC Radio 5 Live podcast. To find other programmes you might be interested in, click bbc.co.uk/5live, where you'll also find our terms of use.
Good morning, it's Friday and this is Wake Up to Money with Jeremy Naylor and me, Mickey Clark, on BBC Radio 5 Live and Radio Ulster. Coming up in the next half hour, Moody's downgrades the credit rating of 15 global banks, including 3 of the UK's biggest names. What does it mean for us?
Angela Merkel, meanwhile, sits down with the leaders of France, Italy and Spain in a bid to work out a plan to save the eurozone. Will they make any progress before Mrs Merkel heads off for the big game? And customers of Nat West, Royal Bank of Scotland, are left fuming after a technical fault scuppers their online banking. We'll find out the latest. And as always, we want to hear your views, especially if you've been affected by this online banking problem at Nat West and RBS. And Angela Merkel is reported to have brought forward today's meeting so she can go to Germany's match against Greece tonight. What important meeting have you rearranged or cancelled so you head off early for something else more exciting?
You're listening to Wake Up to Money, a podcast from BBC Radio 5 Live. For more information, go online.
bbc.co.uk/5live.
Last night, credit ratings agency Moody's downgraded 15 global banks, including 3 here in the UK, Royal Bank of Scotland, Barclays and HSBC. They were joined by some of the biggest names in the US like Goldman Sachs and JP Morgan, and in Europe with France's BNP Paribas and Germany's Deutsche Bank among them. Moody's also decided to take Lloyd's rating down a notch. It follows a 4-month investigation by Moody's into the international banking system. Let's talk to Ismail Ertuk, Senior Banking Analyst at the Manchester Business School. Good morning, Ismail.
Good morning.
First of all, let's clarify what Moody's is and what it does. What is a downgrade?
Right. Moody's look at companies and banks, whether they are for their creditors. we must remember this is a long-term creditors, the bondholders providing finance to the banks, giving them their opinion. So Moody's express its opinion about the creditworthiness of these institutions in the longer term.
So it's like the creditworthiness that we get as consumers.
Yes.
This is a corporate version of that.
Exactly. Yeah. And then corporations are obviously much more complex institutions.
And why do we think Moody's has downgraded the credit rating of 15 global banks? I mean, there's a specific number here because there are a lot more banks than that. Why are these 15?
Well, 15, and it is globally. For example, we don't hear problems in Canada. We hear problems in the eurozone and the United States. This time there is also a Canadian bank included, although Canadian economy is doing well and their banking system is strong. But what brings together all these 15 banks is their activities in global capital markets. So we're looking at complex transactions between financial institutions in bond markets, share markets, and derivatives markets. So Moody's think the volatility, the risk in these markets is getting worse, and these banks are not prepared well in terms of their capital absorption, the risk absorption and risk management systems.
So it's a reflection of the world economy as it stands at the moment, and also how the banks react or don't, as the case may be, to that situation.
Well, I think the economic situation in the world has less role to play in this downgrade. It is mostly trading of financial assets. Obviously, those are related to the world economy, but it is more than that. It is more about Moody's assessment of the risk management capabilities of these banks and whether their profits will be sustainable given the volatility in the capital market. So it is less so about the economic problems, more so about how capital markets, financial markets operate.
That's interesting because Moody's does actually say, as you say, it illustrates the challenges of monitoring and managing risk in a complex global organisation. We hear about banks, Ismail, about them being too big to fail. Are banks now too big to even control, to operate successfully, to keep a constant monitoring over?
Yes, increasingly. This has been now 4 or 5 years since the financial crisis. And the most recent event, JP Morgan Chase, one of the largest banks in the world, they lost reportedly $2-3 billion dollars, but nobody knows the exact cost of it. So JP Morgan Chase, like other banks here, are really big and doing lots of complex transactions in the capital market. So it is worrying that banking is not getting better. We still don't know what kind of risks that they take, and it is not good news.
What does it mean for the likes of Barclays, RBS and HSBC and indeed Lloyds? Because these are rated at different levels, aren't they?
Yes. This means the ability to raise finance in markets is going to be difficult in the sense that they have to pay more money now when they transact with other banks. Because you've got to remember that banks rely on each other to raise finance. So with the credit rating going down, the cost of borrowing will go up, and any transaction they do with any other financial institution, they have to give more collateral. So the cost of borrowing, doing business for these banks will increase, which is not good news for their customers because those costs will eventually be passed on.
So does that mean that people who want mortgages are going to end up paying more?
Not necessarily, because there are lots of different things that influence the cost of borrowing. Obviously, this will put an upward pressure, but we've heard last week from the Bank of England that the Bank of England is going to provide cheap loans to these banks. And similarly, in the United States, the Federal Reserve, their central bank, said they are going to help the financing cost of the bank. So on balance, it shouldn't put... One
outbalances the other, effectively.
Yes. So, but instead of going down, it will stay probably stable.
So is this a so what about Moody's downgrading? You know, we knew it was coming, we knew it was going to happen, but if they're having cheap money chucked at them, especially in the UK... what does it matter?
Well, as far as the markets are concerned, you're right. People knew that this was coming. But I think the key thing is we have these huge financial organizations, and we still seem to be, quite scary about the way they manage their risk. I mean, remember, these are big institutions. They should be knowing what they're doing in financial markets, and they're not giving confidence to the public in general. And the economy is not doing well. So basically, we have a dysfunctional banking system, which the regulators and the politicians have not addressed.
Well, it's only been 3 years.
Well, it's a long time, 3 years.
OK, we'll leave it there. Many thanks for that. Ismail Ertuk there, Senior Banking Analyst at the Manchester Business School.
Well, let's take a look into some more detail now, exactly how the markets have reacted and how they're likely to open here in Europe a little bit later on with Laura Lambie, Investment Director at Williams de Rowe. Laura, good morning to you.
Good morning.
FTSE yesterday down 55, in fact, after 4 days of gains, which took the FTSE back up above where it started the year at 55.72. Yesterday, with that drop of 55, taking it back down again from the start of the year, as I said, to 55.66. That was a drop, but not by nearly the same sort of margin we saw in the States yesterday. The Dow down almost 2%, a 250-point drop at 12,573. We saw 30 points knocked off the S&P 500 at 1325. Short while ago, the Nikkei was only down 0.5%, a 47-point drop at 87.76. What do you make of this news, and how do you think Europe will open today?
I do think there is no rational explanation why American markets reacted so negatively to Moody's downgrade. It had been well flagged up. They've been looking at banks for the last 4 months. I mean, interestingly, on Wednesday, before the Moody's announcement, Morgan Stanley was already trading like a junk bond. That's actually lower than Moody's rating. So a lot of this had been factored in to bank share prices ahead of this. So I suspect there was a bit of a risk off on American markets, perhaps spooked slightly by lower than expected growth figures from China. But I expect to see European markets perhaps opening slightly off, but not to the same extent.
Do you think this is a bit of a storm in a teacup, in that, they're having so much cheap money chucked at them that their margins are going to be unimpaired?
Yeah, I mean, I do think that the market has viewed it in the States as an excuse to take profits rather than actually thinking that the banks are in any worse state today than they were yesterday.
You don't think it's a case of the Americans worried that the European debt crisis is dragging them into the net?
I mean, to be honest, that's nothing new. This has been rumbling on, for years, as you previously said. And there is I don't think, any new news in all of this. So why the American market was off quite so significantly is, I think, perhaps more to do with risk appetite than anything else.
One of the things that we've seen, of course, banks have been trying to ease policy, in that case, trying to drop interest rates, or in the case of many central banks, of course, have been they're printing money. Quantitative easing is what we're seeing here in the UK. One of the good things, I suppose, in that regard in the market is the fact we've got oil down. Brent down again yesterday by a further $3.50. Today trading 89.85. I mean, this is helping the situation. But what does this drop in Brent that we've seen? We're now at levels not seen since, October, September last year. What does this indicate?
I do think it's a reflection on a slowdown of economic growth. The anticipation that China, one of the huge countries that is going to be a big consumer of oil, is perhaps not as growth orientated as it once was. In that, one has to take into account that they are still factoring in 8% GDP, which is head and shoulders above anything else in the developed world.
In China?
In China, yes.
But over here, of course, nothing like that. Is this going to help us here in the British economy, these declines in the oil price?
I suspect it will. I think many retailers, transport and distributors will be welcoming the fall in oil price, and also for the consumer in terms of fuel costs will be most welcome indeed.
OK, all right. Laura, stay with us, won't you? We're going to look through the newspapers in just a few minutes' time with Laura Lambie. Just want to quickly update you on what's happening on the currency markets. Declines for the euro because of that drop in banks. More concerns about the eurozone. We've got that big meeting later on today. The effects over all of this have been for a move up in the dollar against the euro, but and also the move up for the dollar against the pound at $1.56. The pound against the euro, €1.24.3, making €1 worth 80.4 pence.
This is a download from the BBC. To download other programmes or for more information, go online
bbc.co.uk/5live. We've got your text coming in about the downgrades at Moody. Sean, very forthright here. He says the downgrading simply reveals the truth. Many banks have yet to write off the full extent of their bad debts. When they do that, their balance sheets will be significantly weakened, threatening their very existence, never mind their ability to lend.
And an unnamed texter here, Mickey, very short one, says Moody's, only a few years late to the party.
Yeah, I think we're all thinking that. It was a busy day for German Chancellor Angela Merkel. This evening she'll take her seat in Gdansk for Germany's clash with Greece in the European Championship. But before that, she'll be in Rome for a meeting with the leaders of France, Spain and Italy. At the meeting, Merkel, François Hollande, Mario Rajoy and host Mario Monti will try to hammer out a plan for the eurozone ahead of the European Council summit next week. Monti said yesterday that leaders have a week to save the eurozone, so the pressure appears to be on, and they'll have plenty to discuss. Auditors revealed yesterday that Spain's banks need up to €62 billion to stay afloat, while the new Greek government has confirmed it wants to renegotiate the terms of its bailout package. Let's talk to Kathleen Brooks, Research Director at Forex.com. Hello, Kathleen.
Hello, hi.
A week to save the euro. They should have been saying this about 2 years ago, shouldn't they?
Yeah, I mean, it's pretty dramatic. And added to that, I mean, obviously, next week we do have that big EU summit. It is kind of make or break. But I think this crisis has been rolling on. But it is seemingly getting to that critical stage whereby if dramatic action isn't taken, then there's a very large chance that the eurozone will be a very different place kind of in 6 months, maybe even 3 months' time.
So what's going to be top of the agenda?
Well, obviously, what should be top of the agenda is going to be things like getting growth back into the eurozone, because there's, been huge and terrible recessions in, Greece and also in Spain, of course. But also now there's signs that Germany is also German growth isn't going great. But what actually they'll probably try and do is push for some more structural reform. So just change the way that the eurozone operates right now. So right now everyone issues debt by themselves, hence why we've had the problems like we've seen in Greece. And there's a lot of pressure on Angela Merkel at the moment to maybe issue euro bonds, which is where they all kind of pool the money together, but also to allow to take bigger measures to use the money that's in the eurozone bailout funds to try and reduce pressure on the credit markets of Spain, of Italy as well.
How committed do you think that Germany is to these talks when the leader, Angela Merkel, says, all right, boys, we'll have a meeting, but can we keep it quick because I've got the football to go to tonight? I mean, it is a bit of a weird backdrop, isn't it?
Oh, I know, but I mean, who would have thought that Greece would be playing Germany in the quarterfinals of the Euro final? I mean, you can't make this stuff up.
But Germany doesn't really want Eurobonds, does it? Because it's been compared on this programme before now is that you're using somebody else's credit card to raise money.
Well, yeah, I mean, I heard a good joke yesterday that it was like every time you order a Greek salad, ask the German in the room to pay for it. I mean, that's kind of how it's been. Essentially, the problem is with closer fiscal unity in the Eurozone is that Germany has got the biggest financial might, which means that it has to pay the lion's share of this kind of fiscal union. So you can understand the reticence. So on the one hand, it's definitely in Germany's interest to have closer union in the Eurozone and to protect the Eurozone. Because remember, it gives Germany a very big important position on the world stage. But then on the other hand, they can't be too into it because, of course, Chancellor Merkel does need to play to the German taxpayers and actually get elected next year.
Do you think there's any chance at all of Germany popping out at the top of the Eurozone? In other words, the one currency to come out because they're just losing faith in the whole system?
I think, interestingly enough, a poll was done and it showed that there were more Germans against staying in the Eurozone than there are in other kind of more peripheral countries in Europe. So I think that's a good point. But then I think, Germany has benefited massively from the Eurozone. It makes fantastic products and it's been able to sell them at very competitive rates to countries in the periphery. But it's being dragged down. Well, it has and it hasn't. I mean, in some way, this Eurozone crisis has also pushed Germany's borrowing rates down to its lowest level ever. So that's, that helps the German economy. Added to that, it's definitely given, as I said, it gives Germany a fantastic position on the world stage. So politically, it's important, I think, for Germany to keep the Eurozone together.
OK, Kathleen, many thanks for that. Kathleen Brooks there, Research Director at Forex.com.
Wow. Goodness. Well, let's move on. Take a look at some of the newspaper headlines. And in fact, just a very brief headline in the front of The Guardian. It says, as Mickey was saying, we have that week to save the Eurozone. But let's get back now to our markets guest this morning, Laura Lambie, Investment Director at Williams de Broe, still with us. Laura, let's kick off with the Financial Times. Reports that the Association of British Insurers has expressed serious doubts about Xstrata's merger with Glencore. Now, this occurred some time ago, but this is all about pay.
It is indeed. This is perhaps the continuation of the shareholder spring, where shareholders have to vote on a fairly attractive package to try and keep the management of Xstrata in place when the merger of Glencore goes through. And interestingly enough, in this particular shareholder vote, if they vote against the share package, then the merger with Glencore will not go ahead, which is good news for shareholders who in the past have voted against pay packages, WPP being the last one. But in actual fact, the company hasn't to take any notice of the shareholders if they don't want to.
Good old shareholder spring.
Now, the Times says Severn Trent Water has issued a retail bond in a bid to raise between £50 and £100 million. Cheaper water bills for all. Hurrah!
Hurrah, yes. This is Severn Trent's revenues are very much linked to the RPI. So this bond is actually linked to the retail price index. The interest that will be paid and the capital that will be paid at the end, the maturity date of the bond, is linked to inflation. So for those looking to seek protection from inflation, that could be an attractive investment.
The Times this morning, this is on the front page of the Times, front page of the main part of the paper. Doctors and dentists, the taxman will see you now, it says, reveals that 1,300 doctors and dentists are being investigated for tax evasion. I mean, celebrity tax avoidance, a bit of a hot topic at the moment. Poor old Jimmy Carr, in fact, his picture's on the front of the Times as well.
Yeah, I mean, the Times has really got its teeth into this one. HMRC has been increasingly aggressive in pursuing tax avoidance, not just for celebrities, across the board, and tax advisors, it seems, are having to try and stay one step ahead in dreaming up tax vehicles that protect individuals, and quite shortly the revenues coming in and closing these down.
How would you feel, Laura, if your tax details were broadcast on the front of a national newspaper?
Oh, I mean, it's interesting, but I think it probably rhymes with the public, because they are feeling the effects of a recession in the UK. Austerity, exactly. And why should individuals who should be paying their way not be paying it? So I can see why it makes news.
Well, quickly, potentially illuminating quote of the day in The Independent. What would happen if Italy, Spain or Greece went back to their old currencies? I don't know. Maybe there would be a loss of wealth, but I don't understand why. And that's from the former Italian PM, Silvio Berlusconi.
I think that tells you more about him than the eurozone, doesn't it?
OK, all right, Laura. Thanks so much indeed for that. Have a good weekend. Laura Lambie there, Investment Director at Williams de Breau.
Well, the 1,000 Nat West branches stayed open late last night, and they'll be opening their doors early this morning after the bank's online services failed to work properly yesterday. Technical problems in the online systems of NatWest, Ulster Bank and parent company Royal Bank of Scotland mean many of their 8 million customers have been unable to access their cash via the web. Here's the NatWest's Susan Allen explaining what went wrong.
Normally our systems update overnight and the balances and all the information on your account is updated overnight. What's happened is that we had a problem in running that process, which meant it's running behind and hasn't caught up. So the information on our systems is not correct. The money that people have in the bank is absolutely there, will be credited to their accounts, but right now the balances are not showing correctly. So what that means practically is that if people have paid in money over the last couple of days, it's not showing on their account, and therefore there may be some problems in trying to access that. We do know it affects a significant number of customers, hence why we're working really hard to fix this. It is not something we're proud of.
Let's talk to Claire Francis now from moneysupermarket.com. Morning, Claire.
Morning.
Bit like going back to the old days of the chequebook, isn't it? It takes 5 days to clear. I mean, what's the latest on the situation?
Well, I think the latest is for many customers, their accounts have now been updated, albeit there may be some that are still waiting, still won't be showing all their entire balance. And obviously, as you mentioned, NatWest kept 1,000 branches open late last night to try and help people.
And I think they're open at 8 a.m. today, aren't they?
Yes, they're reopening first thing this morning. And that's just to try and help people who perhaps tried to do transactions online or over the phone yesterday and weren't able to, so they can go into the branch and hopefully get things sorted. And that's also an opportunity for people, if they are short of funds, to arrange a short-term overdraft allowance and that sort of thing, just to ensure that they can get by until this is properly resolved.
Yeah, I wonder how much the interest rate on that will be. But there you go.
To be fair, NatWest have said that nobody will be out of pocket as a result of this. So even
that's fair enough. Yeah.
So even if there are short-term charges incurred, they'll be refunded to customers.
Do we know how this happened and who's been affected?
Not being the world's most technologically savvy person, I don't know exactly what went wrong. But as we just heard from the NatWest spokesperson then, obviously they update their systems overnight and update all the accounts, and something went wrong. As with all the banks, they run on multiple systems, which means that if something goes wrong, the whole network doesn't sort of go into meltdown. But obviously this has been affected a large number of people, particularly as Thursday's the day that a lot of benefits are paid in and things like that. So it's definitely been an inconvenience, to put it mildly, for a lot of people.
I mean, NatWest has apologised on its Twitter account, but what rights do people have if they've been unable to access their money?
Well, as I say, NatWest has said that nobody will be out of pocket. So if you've incurred a fee because you've gone over your overdraft limit or had a payment bounce, that will be refunded. If it's a fee that's incurred to a third party, maybe a credit card bill that's late payment, that won't necessarily be automatically refunded by NatWest, so you'd have to then contact the card provider, explain the situation. They should scrap the fee. If they don't, contact NatWest and they'll sort it out. OK, thanks for that, Claire. Claire Francis there from moneysupermarket.com. Quick text here from Muzz. Which is the best ratings agency? Who grades the rating agencies?
Good question.
One. And as they all missed the banking crisis, not many.
5 Live's Wake Up to Money podcast. Delivered to your computer every weekday. For more information, go online.
bbc.co.uk/5live.